Okay, traders, in this video, we are going to rewind a little bit and go back to the basics with the charts and the grid because we can't leave our basics when it comes to how to trade the chart and how to trade the grid. The basics give us the foundation for making consistent trades, and this is a perfect example. The other day, I had the opportunity on the euro dollar to bite twice using the same simple strategy. And it's worth noting that it works both for support and it also works for resistance. And it's not to be ignored. So let's go ahead and jump in and take a look. Now, this was in the morning, Eastern Standard Time, and I took a quick look at the euro dollar to see what it had been doing. And I looked at the 4 hour chart just to see where it had been moving around and get a little bit of history. And price was comfortably, running around 1900. And when I looked at the grid, obviously the first thing I noticed was there was a whole bunch of price and congestion with different numbers represented here on our 1, 5, 15, and 1 hour lanes. And we had green boxes indicating support. Now price was at 1895 here, sitting and resting on top of our green boxes, and since price was below this one box here on the hour, it turned red. All that yet, we still had all of this green support. So this was a no-brainer trade. And what I mean by that is with price resting above all of the green boxes, all of this price, we just automatically think about um, throwing a trade long buy on top of this support to go long on euro dollar. And we take this trade thinking, okay, if 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 we're taking this trade long, the euro dollar is going to have to do some work to break through our resistance. It has to break through two 5 minute boxes, two 1 minute boxes, two 15 minute boxes, essentially two 1 hour boxes. So this is, we could think about it like a concrete floor possibly if you wanted to. So it would have to really work to push through this. So if it did, where's it going to go? Well, 1885, 87, 85. Here again, we have another safety net at 79, 80, 81, 79. This is another layer considered a safety net. Ultimately, down at 70. So, at 95, we could think, okay, so this is support. Let's give it some room to go down. If it really wanted to test that, we could think, okay, 80, 15 pips. And then, if you didn't want to stay in the trade, we know where our exit is. But anyway, back to support. This is a no-brainer. We throw a lot on, or a position on rather, and we're gonna take this north, and simply put, that's what it did. So our trade here was at 1898, and it ran up to 1925. At least in this photo here, price did extend to 1930, and you could see at 33, 34, 37. But at least in this area, you're going to have a zone of resistance. So good time to take these pips and go ahead and put them into your account. So simply, you fire up your trading station, you look at your grid, you look at your chart, you see that price is on top of a lot of resistance. On top of a lot of support. You think, okay, we have a good opportunity to go long. And we know where our exits are if you weren't going to hang in the trade. And then, just looking at this was a 1 hour chart here. The top of this band shade, that's an exit. That's always a target. You're always looking at the information on the chart in front of you for your exits. You're looking at the information on the charts for your entries. The information here is support. Go long. We don't have to complicate this. And then the exit, top of the band shade. Resistance, we see it right here on the chart. So we take our trade, and you could consider yourself done for the day, or you could continue to look for other trades. There's many currency pairs. There's lots of time to find another trade. Not that you need to rush into one, although you find one right off the bat. So here is our same trade from 1898, and price was at 1925, and I'm just showing you on a 5-minute chart here where we were. And then, so here was price, and now we're looking at a euro dollar 15-minute chart. And if you notice, I like to jump around different time frame charts, and you get to paint a more vibrant picture of what price is doing, where it is, and what it looks like. And you get to see where the band shades are. So our first trade we took from right in this 1898 here, and we took it in this area, and then price comes back down. Okay, so at 1907, and you'll see the difference of price was here at 1925, and our 5-minute box was at 1900. We can't quite see the 15-minute box here, but in the future, just a little bit later that morning, price did come back down, not below our figure of 1900, but comfortably down to below 1915, 1910. And this is where I entered a second trade at 1909, because we had great support to begin the morning with all of our green boxes here, and then our price went up. Okay, it traveled back down, and this is after we closed our pips, so price came back down, but it still came back down on our 15-minute and 1-hour supports. So just because our 1-minute and 5-minute have turned red, that doesn't mean the game is over, because the supports here are stronger. And when it came down and touched at 1906, I'm looking possibly to buy for a second round trip up. And if I'm buying here at 06, 09, I'm starting to average 26, 23, 19, 19. Try to think of maybe 1920 as a target. So 10, 15 pips for a second bite of the apple. And let's see where we went. And that's exactly what we did. So we bounced from our 15-minute supports here, and then we travel back up to the 20 area for a comfortable 10 pips there, 10, 11 pips. So we take our 10, 11 pips plus our 27 pips. We're at 37, 38 pips for trading the basics. And that's what I wanted to show you. Again, when you're looking at the grid, you're looking for support to go long. If all these boxes were red and price was underneath, you would think this is going to act as resistance and price would go down. Simple strategy, and when you use it effectively, you can make a trade, take your pips, and then if price comes back down again, you have to consider, is it worth going back up for some more pips? And then when we took this, you might be thinking to yourself, okay, I just made 27 pips, 28 pips on my first trade. I would like to take another 10 to go, up in this region towards 20, because our high was above 33, up to 40. So maybe it would go above 20 into the 30s. So maybe room for 10 pips. At that point, you might think, okay, I am willing to jump in at 1909, as I did, and because at 1909, and think, as soon as this runs down to my 1-hour support, if it breaks this box, I'm out. I have 27 pips. I'm willing to spare 8 or 9 and still leave it a 20-point run for the day.